Hello and welcome to Stock and Roll, the podcast where we deep dive into the world of equity compensation. In today's episode, we're happy to welcome Sarah Suter from the Swiss stock exchange SIX. As an analyst and relationship manager guiding companies through one of their most transformative journeys, Sarah brings invaluable expertise on the IPO process. Sarah will walk us through the compelling reasons companies choose to listing on a public exchange, the critical preparations that maximize success, and the ongoing responsibilities that come with a public company status. She'll also share insights on how IPOs can affect equity compensation strategies and talent retention. Topics at heart of what we explore here on Stock and Roll. Hey, now we're here for another podcast. We've always got a lot of questions about listings and how to list. And then we thought then it would be just great to deep dive it together with the stock exchange. Hence, we're here with Sarah from SIX. Welcome. Do you want to give a few words about yourself?
Thank you, Christoffer, for having me. It's really great being part of this podcast series, supporting companies in their going public process. My name is Sarah Suter. I'm working for the Swiss Stock Exchange as an analyst / relationship manager. I'm part of the origination team, so our task or what we do is originating new listings for the stock exchange. We're supporting companies in their going public process from the stock exchange point of view.
Very, very exciting. And SIX, could you give it just a couple of words also about the SIX, what that is for people that are from other countries or just a bit of context?
Okay. SIX is actually more than just the stock exchange. It's a financial infrastructure provider group. We have different services that we offer within the group. So it's 4 pillars. We're active in financial information. We have the exchange on the one hand side and then all the post-trading afterwards. So we kind of cover the whole securities value chain with these services. Then we also have banking services. So we're kind of the backbone of the financial infrastructure within Switzerland. So we operate the whole network between the banks. This is what we do. So we're more than just the exchange, but I think the exchange is a very important part of SIX Group.
That's really, really exciting. So if we start a bit off with, I think it's always nice to imagine, let's say we are a fast-growing tech company, couple of hundred people, and we are in a situation where we're looking to potentially IPO. That's one of the things that we are looking at. Then a bit first of all, why should we list versus other alternatives?
Yeah. There's different reasons to do an IPO, and it depends very much on the company, which reason is actually the one that comes into focus the most. I think the main and most important reason is you have access, continuous access to capital, probably more easier than when you're a private company. This is due to the fact that you can just approach a larger investor base. You have access to retail investors, of course, when you're a listed company, but also to institutional investors, like an investor category that you usually don't have access to when you're a private company. It also generates visibility. If you do an IPO, you usually receive a lot of media coverage, especially in Switzerland. We're a small country, there's not that many IPOs every year. So if there's an IPO, you really get the media attention. And this also helps you to kind of maybe access a new market, become more popular in the Swiss market, also in the European market. It raises brand awareness. You also increase credibility and transparency. You have to fulfill certain reporting requirements. You have to become better organized as a company. You have to come up with an internal control system. All this helps you to kind of raise your profile. It's a possibility for founders and existing investors to sell part of their investment. Of course, not all of it.
No.
But it's definitely like one of the opportunities to cash in. For such a company that you mentioned before, I think one interesting aspect that you don't really have when you do a trade sale. I mean, if you do a trade sale, most of the time these people also completely exit the company. They're not part of it anymore. But if you want to stay on board, if you still kind of want to stay the decision maker, an IPO could be a great option because it allows you to remain independent. You have new investors, but you don't really sell your stake. You don't really sell to a PE, you don't sell to another company. So you stay invested, you will remain the decision maker. And I think this is an important aspect as well.
100%, yeah. And if we then, as this company decides that all these arguments kind of counts in favor for a listing, and this is a big question, but it's like, how does the process look like from your point of view? What do the company need to do? So like kind of, what is the plan and the main items that they need to kind of go through?
Of course, such an IPO undertaking, and I think this is also true for a trade sale to a certain degree, but like an IPO is a big project. You become a public company. That means that you have certain structures in place where, as a private company, you will still have more leeway. You can do stuff more flexible, but as a public company, you have to deliver. So what is important for a company is to start early on to get IPO ready. The earlier you start, the more easy it is because you can approach different topics at a different point in time. You're not really rushed to actually get ready. So like, for example, your financial, it's possible that you have to convert to a different accounting standard, which is usually quite time consuming. If you start to do that early, you already have it in place when you start the IPO process. One important thing here is that for the IPO, you're required to have certain partners on board. And it makes sense to involve them early on as well. They will also support you through the whole IPO process. Maybe as a side note, like in Switzerland, if you have to do an IPO and you list your shares on a stock exchange for the first time, you're required to have a recognized representative that is a bank. And there you have, or you should actually select a bank that has the required experience, that has done such transactions before, and they will guide you through the process and also advise you on everything. Then you have to have a law firm on board that supports you in the legal matters. And of course, you also have to have an audit firm on board that supports you, for example, in the gap conversion, and then also in all the financial aspects through the IPO process. So the first thing you do, you select your partners and you start to work on certain things to actually get IPO ready to a certain degree.
And these partners, are that kind of typically specific companies that you have pre-approved, or can it be like any bank, any auditor, or are there like kind of just where to start as a company for selecting those if you don't?
There are certain requirements. I mean, as mentioned, you need to have a recognized representative when you do the IPO. Also, when you just release your shares, then it can also be an audit firm that takes on this role. And these recognized representatives, the banks that want to have this role, they need to register with us and kind of be approved as a recognized representative. The same holds for the audit firms. They don't need to register as a recognized representative, but they also need to fulfill certain requirements. So it cannot be any small audit firm within the country because, I mean, every small company also has an auditor that goes through the financial statements at the end of the year. So it has to be a certain audit firms, like, for example, the Big Fours in Switzerland usually qualify for that. So
super.
You have certain requirements there.
And then when we kind of dive a bit into that, kind of takes us to this requirements that are there. It's like, are there any requirements of number of shareholders, type of shareholders? Is it any kind of the listing requirements? What would that typically be?
There aren't many hard requirements that we set from the stock exchange. So there are certain minimal technical requirements that we have. You need to have a track record of 3 years. So this means audited financial statements 3 years back. We have a requirement on the consolidated equity capital. It must be 25 million Swiss francs, minimum. So not share capital, really equity capital. We have a free float requirement. So the free float needs to be 20% and 25 million Swiss francs or equivalent at least. On the free float, it's usually shareholdings below 5% that fall into the free float. Everything above cannot be counted. And in the IPO, you normally also have these lock-up agreements where certain major shareholders are not allowed to sell their shares in the IPO, or at least not their whole investment. And these shares that are kind of blocked through the lock-up agreement, they're also not part of the free float. Maybe on a side note, these are minimum requirements set by the stock exchange. Of course, what also comes into play are the requirements of the investors. So they also have certain expectations. So with regards to the free float, 25 million Swiss francs is rather low. Usually investors want to see a higher free float because it increases the liquidity of the shares. It kind of allows them to enter, exit their positions. And a lot of also institutional investors, they have investment policies in place that kind of allow them only to invest if there's a certain free float. This is very important. You have certain leeway as a company if you have a promising equity story, or if you kind of give a positive sign that founders and major shareholders stay fully invested. This can help to actually have a little bit of balance there. But I think that's something important to keep in mind, like investor demand and requirements matter as well. What we also have is prospectus requirement. So companies that want to list in Switzerland, they must publish a listing prospectus. The listing prospectus is kind of the most important document for the IPO. It's an informative document where the company discloses all important information about itself. So it can be financials, it describes its business, it discloses risk factors as well. It describes the whole offering, also book building, timeline, etc. And it should help the investors to actually make an informed investment decision. This is also something that comes into play. But this is also something that is then prepared during the IPO process.
Do you see, of course, I assume it's quite similar across different kind of stock exchanges and countries, but are there any kind of main differences from country to country or stock exchanges to stock exchanges, or is it pretty much standardized?
It's pretty much standardized. You have certain differences, but not material ones. I think the minimum requirements are really set at a very low level, like in all the countries. In Europe for sure. And it doesn't really make a difference from this perspective. I think what really matters is what the investors seek. And this is what comes into play.
No, super. And then what I always find a bit challenging to kind of get my head around is like, okay, it was a share you own the share in a cap table tool or in an Excel spreadsheet.
Yeah.
And that was the source of truth. And then kind of getting that share into kind of a listed share. So I understand that may be like a big process, but like, do the previous owners have to sign something? What do they kind of have to go through? Is it like opening accounts, just to kind of understand a bit of like the process from Excel to a listed share you can trade on a stock exchange?
I mean, the responsibility for the listing lies with the issuer. So you don't really need to do anything as a shareholder.
No.
What is important, I mean, as a private company, you sometimes have certain restrictions of on share transferability in place.
Yeah.
And I mean, the company kind of must ensure that this is not the case anymore when they go public. And certain things, like if this is a statutory requirement, and it requires an AGM to change that, all these kind of things. But you don't really have, there's no burden for the shareholders. No. This is something that the company needs to initiate, take care of. And I mean, you also have the law firm that advises on these kind of things. Yeah.
Oh, that sounds good. And when it comes to, like, let's say, okay, now you are listed, you've kind of made it through, and but of course, like there are some ongoing differences from being like a private company to now suddenly being a listed company as well. So like, what are the requirements that will kind of continue to be there, and that you will kind of that will keep you a bit busy as a business owner, or as a part of management, or
Of course, there are certain requirements that will keep you a little bit busy. You need to be way more transparent as a listed company than as a private one.
Yeah.
I think one of the most obvious requirements that you have is that you need to publish semi-annual and annual financial statements. So you usually have the reporting that you have to do.
Yeah.
In Switzerland, we also have the requirement that companies must publish a corporate governance report as part of the annual report, so once a year. You have certain ongoing reporting obligations. You have to report on management transactions. If a shareholder exceeds or kind of exceeds certain threshold or falls below them in terms of his or her shareholdings, it needs to report that to the issuer, and the issuer is required to report that afterwards to the market. Then you also have ad hoc publicity. I mean, it's a publicly traded company, and all shareholders and market members must be treated equally. So if there are any price-sensitive facts, you have to inform the whole market about these kind of things in a timely manner.
Yeah.
And I mean, it's the obligation of the company to know what is a price-sensitive fact.
Yeah.
But this is very crucial. It also usually happens outside of the trading hours, if it's possible. So ad hoc releases are normally published, I don't know, early in the morning before trading starts.
Yeah.
It's kind of a challenging topic. What's also important to note there is that you cannot disclose all price-sensitive facts immediately. I mean, if you're in a negotiating an M&A transaction, or like an important contract with a supplier or a customer, you cannot report on that or make this information publicly available immediately.
Yeah.
So it's possible to postpone this reporting. The company just needs to make sure that there are certain mechanisms, structure in place that ensure that people who know of this price-sensitive fact, that it really remains with these people, that the information remains confidential until it is published or released to the market. Yeah. And if there's a leak and it becomes a known fact, they must go out with the information immediately.
Yeah. I find this that topic a bit hard sometimes, like, because you in our world, when there's like employee stock option programs and there's people exercising stock option programs, meaning buying shares at a price which is lower than the market price, it's like, what is the time to report it? Because let's say we have an option program that we approve, and then the participants don't know the details yet, but it's been worked on. Some know because they've been a part of doing it, and then they're increasing their exposure by getting options, right? So it will be part of that. And then it may be a few days, and then you kind of send it out to the participants. Then it's another timing thing. Is that when you should report it? But the point is that maybe many of them still haven't seen it because they haven't accepted it or signed it.
Yes.
And then they have like days later when it's signed. So I often find it a bit hard because it's a kind of a not so clear line when there's these things. Because ideally, like you report it when it's been approved or when it's like now it will come, but still like all the participants don't know about it. So
I think it's similar as a public company. I mean, especially if there's like an ongoing process about something that really has an impact on your share price. Yeah. You really need to be, or I think it need to be well defined when you will go out with the news and when it will be known by or when it should be known by the market. And before that, you really have to make sure that it remains confidential. Yeah. But you also have people that are responsible for these kind of things. Yeah. I mean, that's also an important part about like becoming public market ready. Like you have to think about these things. Yeah.
100%. And you have a responsibility for a lot of investors that are not so professional as the investors are in a private equity company if you're fully owned by that.
I agree. I agree.
ESG and sustainability is getting quite a lot of attention, both in our kind of world where it comes to like designing equity programs, but of course also on reporting. From the stock exchange point of view, like what are the new requirements related to this that has come over the last, let's say, 10 years, and how and what do you need to report on as a general basis?
I think we need to distinguish there between how it affects the IPO process, like what you need to consider there, and how it affects you as a listed company. I mean, we have certain requirements in place since the beginning of 2024, if I'm not mistaken. Before, it was possible for a company to publish a sustainability report, but it was not a requirement. And now, for companies that are listed and exceed certain size criteria, so it's not mandatory for all of them, they must report on sustainability matters. So it's like environmental matters, social matters, employee matters, different kind of things. So this is a requirement. Then there's also certain obligations for commodity firms or firms that are active in an industry where child labor or metals are a topic, so they need to be careful as well, and they have additional requirements as well. Yeah, I think as a company that wants to do an IPO but is still private, you don't have these requirements yet. Yeah. But it makes sense to actually think about sustainability early on. Yeah. First of all, because it's possible that you have to be compliant with these requirements when you become a public company. Depending on your exposure to the EU, you also have to fulfill the sustainability requirements that are there, which are a little bit stricter than the ones that we have in Switzerland. The other aspect is that sustainability is also a factor that affects your business. I mean, it can be a risk. It can bring up certain opportunities that you haven't had before.
Yeah.
And investors want to have the complete picture of your company. So you really have to think about these aspects. You have to be aware of how sustainability affects your company, how you affect, or like what's your impact on environment, etc.
Yeah.
And then give investors a full-fledged picture about that.
Yeah. And another kind of topic being not necessarily directly related, but a bit like other requirements that will come is like, how do you see KYC, kind of AML, these things how will that impact a company that were not listed and then you get listed? Is it like more requirements for shareholders or would that remain the same?
I mean, you already have there's no requirements from the stock exchange.
Yeah.
You have legal requirements in place.
Yeah.
And even as a private company, you must comply with them. There's usually no leeway. If you become a public company, it's not stricter from a legal perspective, but you really have the respective structures in place. You cannot make any mistakes because your publicity is just way bigger, and it will definitely have a bigger impact if you kind of do not comply with these laws.
Yeah. Do you, from the stock exchange point of view, do you ever kind of touch upon items related to employee shares, or kind of do you feel that there's any difference if you're listed or not when it comes to employees? And the reason why I'm asking is because of that, maybe that employees are perhaps the investors that in some cases that you will have that know least about a financial instrument or a share. Because let's say it's a 5,000 people construction company, and they invite every employees into that, and then you end up with having 4,000 shareholders that would normally never invest in anything, perhaps. So like, kind of, is that a thing that touches you, or kind of is it not so much?
It doesn't really touch us. I mean, for us, it doesn't really matter. But I think for the company itself, it is an advantage being a public listed company because, I mean, if you're a private company, you become a shareholder or you have like stock option programs in place. It's an incentive, but usually employees cannot trade them that easily. There's not that much liquidity in your shares. If you become a public company and you have employees as shareholders, it also allows them to actually trade in their shares. Which can help you to also attract new talent, to incentivize people, to retain talent. And this is definitely an advantage. I mean, companies are fighting for the best talent. If you have this visibility and if you can also offer that to your employees, that's definitely a benefit.
And I totally agree. I think the fact that a listed entity can actually provide liquidity to employees that have call it shares vested or shares they acquired, like versus the alternative having to wait until next transaction, which may be 2 years from now, right? It's quite hard sometimes to really feel the value of what they have, which is a lot easier if it's on a stock exchange. So
I mean, you don't really know the value.
No.
Actually, you don't have an exact price. And I mean, with the stock exchange, you have this transparency. You have a price. Like every day, you can just check what the price of your shares is, the value of your shares. That helps, definitely.
100%. No, but good. I think we're kind of getting a bit closer. I just had one other kind of question related to investors. If it's an investor in like a private equity fund or so, and then the company then IPOs, are there any extra requirements for them? Because obviously, like if you're one smaller shareholder, company do it, but is it any anything to think about from a VC or a PE point of view?
I mean, what comes to my mind is, of course, lock-up agreement. If you're a major shareholder, it's difficult to sell all of your shares in an IPO to exit directly. Usually you have to stay invested for a certain period of time, either 18 months, 12 months, 6 months. this is something. Apart from that, there's not really a difference.
No. Do you think the reporting requirements that are on the stock exchange, because of course new things are added, right? With ESG, kind of more focus, sustainability. Do you think it's a risk that it may be a reason of not IPOing versus holding private, that the reporting requirements become too much, even though you kind of understand that it's needed because we have less professional, but do you feel that it's a risk and a con for listing processes?
It's not really a risk. I mean, as a private company looking at the IPO option, you have to be aware of that. There will be additional costs related to these reporting requirements. Of course, it also brings advantages. I think it's an initial work that you need to do, because you have to hire additional people, you have to build the know-how, you have to have certain structures in place. So this financial reporting kind of can happen automatically. I think the first time you will do it, it will be a lot of work. It will become easier afterwards. But it also helps you to professionalize your company. And this can also be an advantage afterwards, because if you have these automated structures, it also helps you to it brings trust to investors. It helps you to attract new investors. So it's kind of this up and down side at the same time. And I think the company ultimately need to decide for themselves, is it worth it? Do I want to, can I support this? Do I have the size? Do I have the resources to actually do that? But I think companies that really intend to go public, they usually have the capacities.
And I think also, like, it's all about understanding it. It's very easy from far away to say that, if we list, there will be all this blah, 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 and things that will come, right? And then you need to kind of deep dive a bit into what is it actually, and how will it be, and then you'll find out. But okay, on that note, I just wanted to kind of make a comment. I think what you do with these IPO academies that you do here at Six, I think that's a super initiative and a nice way of like making sure that companies can learn a bit about it and all these topics deep dive even more than what we've done now, and also kind of understand if it's a right fit for your company or not. So
I agree. I mean, it really helps them to actually get in touch with the right partners that are a crucial element of a successful IPO. And it helps you as a C-level person to actually get a feel of what has to be done to become IPO ready.
I think that's great. But good. Then I think we'll leave it to that. Thanks a lot, Sarah.
You're very welcome.
Super to talk to you, and it's so great to kind of hear a bit about the stock exchange side of this as well.
It was really interesting talking to you. Thank you very much for having me, Christoffer.
Thank you.